Before starting with a practical, just have an introduction about VAT. VAT is a system of indirect taxation which has been introduced in lieu of sales tax. It is the tax paid by the producers, manufacturers, retailers, or any other dealer who add value to the goods, and that is ultimately passed on to the consumer. VAT has been introduced in India to ensure a fair and uniform system of taxation. It is an efficient, transparent, revenue neutral, globally acceptable, and easy to administer taxation system. It benefits the common man, consumer, a businessman, and the government. Concept of VAT. The essence of VAT is in providing set off for input tax, and this is applied to the concept of input credit rebate. This input credit in relation to any period means setting off the amount of input tax by a registered dealer against the amount of his output tax. The value added tax is based on the value addition to the goods, and the related VAT liability of the dealer is calculated by deducting the input credit from the tax collected on sales during the payment period. We will just see in practical. The general terms we have to use in VAT is input tax. This is a tax paid on purchases. Output tax. This is a tax charged on sales. Input credit. Amount of input tax that is permitted to be set off against output tax. And composite dealers. Dealers with annual gross turnover not exceeding a certain threshold decided by the respective state governments can opt for a composition scheme whereby they will pay tax as a small percentage of their gross turnover. See, VAT rates are VAT at the rate 4%. The largest number of goods comprising of basic necessity items such as drugs, medicines, agricultural and industrial inputs, capital goods and declared goods are under 4% VAT rate. Some of the commodities are exempted from VAT. This includes a maximum of 10 commodities that each state would be allowed to select from a broader approved list of VAT exemption. The exempted commodities include natural and unprocessed products in unorganized sector as well as items which are legally barred from taxation. VAT at the rate 1% is for a specific category of goods like gold, silver, etc. 12.5% category remaining commodities are under the general VAT rate of 12.5%, means other than 4% and 1%. Rest all the goods are at 12.5%. So we have just seen the basic concept introduction to VAT. Now we will see how to maintain through ledgers and vouchers. See, already we have created the ledgers for debtors, creditors and purchase sale account, as we have to use these groups to set the VAT. Before creating a ledger for duties and taxes, means VAT input and VAT output system, first we have to make some changes in existing company creation form. Press Alt F3, move to alter. See here, at the time of company creation we have just left the use Indian VAT heading to no. Now we require the VAT system. Please activate it. Press Y. Find yes. Enter your VAT TIN number. Rest things we will keep as it is except yes. So now we will get the modifications under the ledger groups. if you notice here, accounts info, ledgers, we will just alter our TV purchase item. See, previously this column was not available used in VAT returns. Now a VAT is applied to TV, so we are making it just yes. The percentage we will add at the time of VAT input creation and VAT output creation of ledgers. So we will keep not applicable here except yes. For sales also we will just have a change here. Fine. While purchasing an item, we have to pay the VAT. So we will create a ledger name VAT input, suppose 4%, as there are different categories of VATs 4, 12.5 and 1. So for each and every group we have to create the different ledgers. We will just see the example with 4% right now. The suitable group for taxation to add a tax is duties and taxes. This group is used for nominal unpaid duties like municipal taxes, stamp duties and VAT, etc. See here, type of duty we will select VAT. Now select a tax class. So a tax class we have to take here is input VAT 4%. So automatically at the rate of 4% the amount will be calculated on our assessable value except yes. At the time of selling the goods we will require the output VAT concept, VAT output 4%. The group will be same, duties and taxes. Select the class, duty type to VAT, and class we have to select output VAT 4%. Save the ledger. So in this company we have added two groups, VAT input and VAT output, and some changes to item creation, purchase and sale. Just we will create more items. Suppose refrigerator purchase, the group is purchase account. See, used in VAT returns, yes. Class not applicable. Refrigerator sorry, refrigerator sold. Sales accounts, change to yes, not applicable. Fine. We have just created some of the ledgers. Now we will see the voucher entry. Move to accounting vouchers. Once again we will see the purchase entry, that is a credit purchase entry. See here, enter the bill number, select the company, creditors, purchase account group. Here we are purchasing TV purchase. See, select the tax class, purchases at 4%. Fine. Suppose 15,000. In same bill we are just purchasing refrigerators also, purchases at 4%. Enter the rate. Next 15,000. Now you can select the VAT concept here. See, VAT input 4%. See, 15,000, 30,000, on 30,000 4% calculated automatically, that is 1200. You can check this whether it is calculating right or wrong. Just move to calculator. See here, the shortcut is Control N, or by pressing mouse also. Control N. See, we are right now in calculator. Suppose 30,000 into 4 divide by 100. Enter. Check the figure. See, 1200 is calculated here. To move on a voucher creation screen, Control M. So we have seen at the time of credit purchase how to add VAT. Accept, yes. So while purchasing, VAT input class we have to add here, but at the time of sales, F8, enter the bill number, daters, press enter right now. Sales account, suppose TV sold, sales at 4%, 20,000. Refrigerator sold 4%. Here we have to add a VAT output 4%. See, 1760 at the time of sales. While purchasing, it was 1200. So how much tax we have to pay right now to the government? So we will minus VAT output by VAT input, and the remaining amount we have to pay to the government. It means the taxation amount. But no need of calculating it manually or keeping the track of each and every bill on papers. See, Tally itself create a VAT report. So to see that report, just come out from vouchers, escape, move to display. Here you will get a report, VAT reports. Press enter on VAT competition. See, sales output VAT 4% 1760, which was calculated on assessable value 44,000, and input credit brought forward input VAT for purchase assessable 30,000, tax amount is 1200, so VAT payable is 560. Hope you have understood the concept of VAT. Now to pay the amount, VAT payable amount, the entry we have to pass inside F5 payment, as this is our expense. So just select the VAT output, as the excess amount of tax is remaining under output ledger. Say 1760. Enter the amount which we have checked right now in the VAT competition report. Enter. Select the cash ledger, or if you paying by check, just select the bank. Suppose by check we are paying ICICI. Enter check number being VAT paid to government. Accept, yes. So we have completed a new group in this video, that is duties and taxes, and the complete concept of VAT.